The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box. It's Tuesday morning. I'm Steve Sedgwick in the warm in London. And Sylvia Morrow, well, she's in her happy place in Brussels. And these are your headlines. China's President Xi warns there are no winners in a trade war as export growth slows and imports decline at their sharpest pace in 14 months. Wall Street closed in the red, weighed down by Nvidia as Chinese regulators open a probe into potential violations of anti-monopoly laws.
Rachel Reeves becomes the first UK Chancellor to attend a EU finance ministers meeting post-Brexit, pledging a stronger trade relationship.
What I was aiming to do today was to begin to rebuild those bonds of trust that have been fractured in the last few years under the previous government.
And Teamviewer striking a deal to buy 1E as the German software group looks to expand its North American presence. We're going to speak to the CEO, Oliver Steil, at 6:15 GMT. A very good morning to you all. I hope you're all fine and dandy. Lots to look forward to in the week ahead, including CPI tomorrow in US, PPI the day after, and of course, we're all looking forward to that rate decision on December 18th. But despite Powell talking about how robust the US economy is, I think you all think we're shoed in for a 25 basis point. Am I right? Yes. Okay, good. And then, of course, the main event is in late January. Someone's becoming president, apparently. We haven't talked about it. Anyway, meanwhile, there will be no winners in tariff wars, trade wars or tech wars. That's according to the Chinese President Xi Jinping speaking this morning. This after export growth slowed in November, coming in at 6.7% on the year. That's less than expected and just over half October's reading. Imports unexpectedly fell on the year, down 3.9%. Speaking this morning, the President, Xi Jinping, said the country something, because I haven't got any more on my read. Anyway, greater Chinese equities are trading in the green today as mainland stocks react to the country's vow to embrace moderately loose monetary policy next year. Its first shift in 14 years. The yield on the country's 10-year bond hit another record low early this morning. Delighted to welcome back to the show Wei Yao, Chief Economist, APAC and China at Societe Generale. I always learn something when I speak to you, Wei Yao, so thank you very much indeed for joining us. Look, once again, we've had more comments out from the Politburo about how they're going to galvanize the economy. What I really liked about these comments, though, and I want to know your opinion on that, is that they really seem to grapple for once right to the problem. And that was talking about the consumer, talking about how they can get the consumer back on track. Am I right? Is that part of the solution that they're seeing it now?
Well, it's actually not entirely new, right? I mean, they made a policy shift in late September. I think everything is just building to the extent, to the direction that, they really want to do something and they want to do more, particularly given, the potential tariff risk and other external challenges. So yesterday's comments are very much indication that the willingness to do something to stabilize the economy, to shift towards domestic demand is quite strong right now.
So that's really interesting, and I agree with you. It's not entirely new, but if it's not entirely new, why haven't they done enough to focus on the hub of the problem before now?
Well, I guess for a couple of years, right, the view has been the housing sector needs to see a correction after decades of running up, and it was also the view that China needs to throw resource at the high-end manufacturing. So the domestic demand was neglected for some time. But since I would say, the past 2 years was very clear, the pain about lack of domestic demand is really building up. And now with the external challenges just means, there's not much choices left that China really have to do some rebalancing.
I mean, the other thing that some of our viewers who've got a perspective of history of how emerging nations become emerged, developed as well, say it happens, Wei Yao. This kind of stuff, It's just how it happens. You go from an agrarian economy to an industrial economy, and guess what? You slow down and your growth rates normalize. Why is still this obsession with 4 to 5% when in history, every economy slows down, they have a bumpy road to transition, and then the economy is developed and basically they can grow at a sustainable rate rather than worrying about looking in the rearview mirror?
Well, I think the problem is less about, the 4 or 5%. There is a recognition in China, in Beijing. I think that the part of the slowdown is normal. I think the problem was more that while you're doing this slowdown, normally you also need to see a transition, from investment-led model to a consumption-led model, from external to domestic, especially given China is such a huge economy. You just cannot rely on the others to absorb your excess supply, right? I think that was the core issue. Now, at least two-hour relief, it seems that there is an increasing awareness of, this imbalance that doesn't work for China, that doesn't work for world. So, yeah, it's time for that shift now, and it's shifting.
Okay. Apart from time, because time is always a great healer for people who have just had a massive hit on their property portfolios, maybe on their stock portfolios as well, concern about employment as well, concern about their kids' employment as well. Time's a great healer in many ways. But apart from that, what can, and in the words of the Politburo, what can they do to vigorously boost consumption and persuade those hard-working, hard-saving, and that's the point, hard-saving Chinese to actually part with their money?
Well, I think actually some of the points, quite a few points already mentioned, by the comments over the past few months, and particularly yesterday, they mentioned they need to stabilize the housing sector. And they also very interestingly mentioned they want to stabilize the stock market. So it seems, the confidence is one channel. The wealth effect is a very important channel for people to feel better about the situation. Then they also mentioned, they want to do more expansionary fiscal policy, more expansionary monetary policy. So that is another very important part. They need to just offer more help directly to the households, to consumption, for things to get better faster.
So I deliberately in this interview haven't mentioned Trump yet, and I want to bring that in now as well. I'm fairly sure it's the topic you get asked about maybe the most as well, and the impact of a new administration. I assume that's the case. Maybe I'm wrong, but how are you planning for this, or do we not know at the moment?
Well, I think we know enough that tariff hikes are definitely coming for China. What we don't know is in what kind of format or the speed of it. But, given that the last time during Trump 1.0, they intentionally avoided a lot of the consumer goods, I think, it will make another argument for them, as in try to be careful to phasing some of the tariff hikes for China to mitigate the impact on the U.S. consumers. So our baseline is that there will be tariff. The first batch of hike will be fairly soon, potentially in mid-2025. But it's not going to be one-off to 60%.
Will China be able to offset those tariffs with, again, successful domestic growth strategies and alternative export strategies?
Well, I think the alternative export strategy will be harder and harder. Actually, even starting, last year or particularly this year, we're seeing a lot of countries are pushing back on China's excess supply. It's not just, US or Europe. It's also a lot of the emerging countries. So, given China is such a huge economy, right? Why not focus more on the domestic demand? And that's the willingness we were talking about. Whether things happen fast enough to offset the tariff shock, I think it's possible. And then what we need is a much bigger fiscal impulse from the Chinese government.
The cost of failure is enormous for China as well, like it is for all countries as well. But for all the reasons that you and I have discussed previously and that have been flagged up more generally, concerns about the demographics, concerns about the middle income trap, etc., etc. Is 2025 an absolutely pivotal year, or actually was 2024 the pivotal year, and actually we can look forward to some form of formation, some form of base being formed already?
I think this year you could say is the beginning of a rebalancing towards more domestic demand approach. 2025 or even beyond, the tariff war, once it starts, I think it will speed up this process for China.
Yeah, fascinating. Well, look, thank you so much indeed for everything you've done for my knowledge base this year. And I look forward to speaking to you in 2025. Have a wonderful holiday season. Wei Yao, Chief Economist, APAC and China at Societe Generale. Right, let's move on to the other side of the Pacific. Should we have a look at the US markets? Look, they were down. I've read somewhere, it was the biggest down day for the NASDAQ since blah, blah, blah in November. Quite frankly, it was down 0.6%. Have you seen the chart, ladies and gentlemen? It hit a record intraday. And then bounced back off that and then came off a little bit. So I think, look, there were some downticks. Salesforce down 64 points worth of the Dow decline as well. Nvidia, we'll talk about that, I'm sure, throughout the show as well, and concerns about anti-monopolistic probes out of China as well. But by and large, it's not the biggest downtick, especially for a market that has gone gangbusters into record territory across the board. In terms of individual sectors, it was actually financials, not technology, that were the biggest decliners, down 1.4%. What did the treasuries do? Well, they seem pretty firm at the moment, don't they? 4.19 is where we're trading on the 10-year. Out to the 30-year, 4.38. In terms of the dollar as well, 2 out of 2 to the upside for the dollar index, 0.1% higher, a mighty incline. But the euro dollar is still trading 105.62, cable 127.54, and dollar yen around the 151 mark as well. Oil, again, on the back foot. I mean, I'll make the point one more time. There was a time when if you had a rollover of keeping 6 million barrels off the table, which is pretty much what OPEC has done within the last 7 days, you would have a mighty reaction to the upside. What have we got now? It was a damp squib. With all respect to the leaders of those oil-producing nations, you got nothing for your bang for the buck. Can you imagine if you'd have put oil back on the table? You could have been in a bit of trouble on the prices. There would be some stop losses on the downside. 67 handle now on WTI. A 71 handle is where Brent is currently trading. And gold not moving dramatically away from that $2,666 per troy ounce level. And the Asian indices that are looking thus on the back of, fairly weak data out of China. But the Shanghai Composite is deciding, actually, we've heard enough from the Politburo this week that's given us a little bit of confidence that things may well improve. Kospi, great move to the upside, 2.3% higher. The weakest of those four indices you can see on the screen is a 2.21% increase for the Hong Kong-based stocks. A man has been charged with the murder of the United Healthcare CEO Brian Thompson. Court records show that Luigi Mangione, a 26-year-old, was charged in New York with murder, 3 counts of criminal possession of a weapon, and 1 count of possession of a forged instrument. He was arrested actually in Pennsylvania after a McDonald's worker alerted police. He was found with a gun and a silencer, and actually a manifesto that may offer clues to his motivation. Thompson was shot in Manhattan on Wednesday morning in what police believe was a targeted attack. OK, coming up on the show, we'll get out to Brussels because Sylvia's champing at the bit to discuss the fact that Rachel Reeves is the first UK Chancellor to attend a meeting of Euro area finance ministers since Brexit. Sylvia is live in Brussels with the latest. Plus, Nvidia closed in the red, Chinese authorities launching a probe into suspected violations of its anti-monopoly law. And we'll be hearing from Oliver Steil, the CEO of Teamviewer, after it announces a $720 million acquisition. That exclusive conversation is coming up next. There was a time when you could be forgiven for being confused. Who was the UK Chancellor of the Exchequer? Do you remember the four we had a couple of years ago? Of course you do. Now we've got one whom we all know who she is. It's Rachel Reeves, and she's become the first UK Chancellor to attend a meeting of the Euro area finance ministers since the country's exit from the European Union. Speaking in Brussels, Reeves described the trip as a first step towards resetting EU relations, saying improved trade ties could boost growth across the continent. Well, Sylvia, there will be voters for Brexit and reform who are up in arms about close links with Europe. Others might think it's common sense with one of our biggest trading partners as well. But actually, no one's going to revisit the treaty, or at least I don't think so in the main. So what can be done?
Yeah. Exactly. It was very clear, finance ministers telling me here yesterday, we are not reopening the agreements. Brexit is done. It is on the table. We are moving on from that. What's happening here at this stage is that both the UK and the EU really have realized that if they work closer together, that will be beneficial for both. And it is helpful from a European perspective that this step is actually coming from a UK perspective here too, because for the longest time, we have seen these two sides of the English Channel actually in dispute. We could say that there has been, to some extent, a bit of a bloodbath over the last couple of years. And what Rachel Reeves was trying to achieve here yesterday was to rebuild the trust, to start a new phase in the UK and in the EU's relationship. Now, it was very clear. She said it several times yesterday. This is not a negotiation. Here's what she was trying to achieve at the meeting yesterday.
I did not come here today to start a negotiation or to lay down a set of demands. Those conversations about the reset and those negotiations will begin in the new year. But what I was aiming to do today was to begin to rebuild those bonds of trust that have been fractured in the last few years under the previous government, and to show our friends, neighbours and allies in the European Union that we want a reset of those relationships.
So what she was trying to achieve is to rebuild trust and basically have this introduction here really before they have more detailed conversations next year about how to basically boost their trade relations. Now, having said that, Rachel Reeves was also very clear that these are the red lines for the UK going forward.
We got a mandate at the election in July to grow our economy, and we also included in that manifesto a number of red lines in terms of our relationship with the European Union. No return to the single market, the customs union or free movement of labour. Those red lines remain, but subject to those, we want to build closer trade relationships, but also defence and security cooperation with our neighbours and trading partners in the European Union, because it is in our collective national interest to do so.
So let me highlight what she just said there. No to free movement of labour, no to the single market, and no to the customs union. So for those Brexit supporters across the UK worried about whether we're going to see any changes to Brexit, this is not what the Labour government is telling us at this stage. What they're trying to do at this stage is really try to look for new ways to support the UK economy, to try to support growth. And in that sense, they will be trying to strike any sort of trade links, any sort of trade deals here that could actually help in that regard. Now, do we have the detail? No. Do they come up with concrete plans yesterday? No. At this stage, nothing is concrete. We don't know exactly what they're going to try to achieve here. This was just a first step. Let's see what else they're going to do, Steve.
There's something very exciting happened, and you almost didn't mention it, although you've alluded to it, Sylvia. And that is all of a sudden, everybody seems to want a relationship with the UK. The Europeans want the UK to have a close relationship because they're worried about it going into the US orbit. A lot of incoming Trump officials have talked about the benefits that could be made from keeping the UK out of the EU orbit and getting it more into an American orbit as a very close ally on the European continent. It's a push me, pull me, isn't it, for the UK? Who's going to win the hand of the UK, Sylvia?
This is beneficial for both, though. Let's not forget that even Rachel Reeves said that too, right? She is on this mission to support UK growth. So, and having spoken to several economists on that topic recently amid the budget and so on, it is clear that looking at Europe is a solution that could help in that regard. So that could be a positive for the UK. But yes, let's not kid ourselves here that this will also be helpful for the EU. The question I have here, and unfortunately I didn't have the chance to pose this question to the Eurogroup president yesterday, is how far in their priority list is actually closer links with the UK? Because when you look at the Eurozone at this stage, they have their own domestic problems. You have budget issues in Germany, budget issues in France. They're trying to come up with new ways to support the defense spending as well. Let's not forget the threats of potential tariffs from the US too. So how far in the priority list for the EU is a closer relationship with the UK. We don't know at this stage, and we know nonetheless that they are at a crossroads here when you think about the future for the EU. Let's see what's going to happen. What is certain at this stage is that there is a rapprochement already, that there was actually quite a lot of warm words yesterday, and that marks a change really in the relationship between the UK and the EU in recent years. Let's see what will be the next steps. We know that the President of the European Council, Antonio Costa, is going to London later this week. The Prime Minister, Keir Starmer, is also meeting with the heads of state of the EU early next year. Let's see. So far, though, it seems that we are witnessing a new phase post-Brexit in the UK's and the EU's relationship.
This is just realpolitik, and I love you using the word rapprochement. Every hit should have the word rapprochement in there, Sylvia. But look, the fact of the matter is, and you've hit the nail on one of them, and I'll just pick up one of your points there, defence. If the Americans, and I say if because it's not the central scenario at the moment, if the Americans turn their back on European defence, which is, let's face it, understandable in some ways, the way that the Europeans have been not defending themselves for a very long time, the Europeans are going to need more European defence from somewhere. Who is the second biggest spender within NATO? It's the British. You can't just rely on the French historically. We know that the Poles are rearming as well. From a pure defensive posture, from building up the European military, of course they're going to need British links as well. And, talking about this €500 billion fund, I'd imagine they'd like the British to be involved in that.
But there's a realization of that. They know that. The Europeans are very clear in their minds that the UK is very important also in that context. And actually, I would highlight that this improvement in the relationship between the UK and the EU started actually with Russia's invasion of Ukraine. Now it's a little bit more advanced, no doubt. But when we initially saw Russia's invasion of Ukraine back in 2022, officials here in Brussels were already highlighting to me how having a closer relation with the UK was helpful in that sense. Yesterday, several ministers, and Rachel Reeves also made that point, that the state of the world, the geopolitical scene is so fragmented. The wars that we have on the European continent, in the Middle East, all of that is making them realize that they need to work together. Defense is at the core of that. Now, the question from a European perspective, though, is what can they do here? Because let's not forget that not all EU member states are part of NATO. So let's see how they can square this equation too. And on top of that, I know that there's already conversations happening here about how to fund defense going forward, where they can find the cash for that. But for the time being, Steve, there's no proposal on the table. So the Europeans themselves have to figure that out. But no doubt that having closer links with the UK is going to also help them in that regard.
Got it. Yeah, absolutely. Thank you. I've got a 5-second answer from you on this question. Would you prefer to be in Brussels outside in 3 degrees or sitting next to me in a lovely warm studio in about 20-ish? Don't answer that. I know the answer.
Oh my God.
You prefer the cold. I know you do. It's your happy place. Thank you very much indeed for that.
I'll have both.
You can't have both. It's like having your cake and eating it. Thank you. Volkswagen and unions failed to find a deal on Monday with the car maker's chief negotiator, saying the two sides are far from a solution. Workers are angry at potential plant closures and mass layoffs from Europe's largest automaker. Another round of negotiations are set for December 16th and 17th. Seriously, Annetta? What is it today? It's the 10th. Why have we got to wait up to another week for these negotiations? They need to crack on. This is a company in the most extreme crisis. Why are they not talking their way through this rather than being at loggerheads?
They're probably talking in back rooms, I would say, to find some sort of compromise. But the positions, that's what they're saying as well, are so far apart. So management wants 10% haircut on salaries and plant closures in order to reduce overcapacities, I should say. The labor side wants job guarantees and the guarantees that there won't be any plant closures altogether. So what they are offering, the labor side, is some sort of package which could then lead to cost reduction of 1.5 billion euro. But that's just in theory. What management needs and wants is cost cuts up to 5 billion euro in order to, as they say, put Volkswagen on a solid footing, because they don't see the market coming back. They are, as I'm saying that all over, I mean, for many, many weeks, there are 500,000 cars missing in the European market, and they're not coming back compared to pre-corona. At the same time, the Chinese market has changed completely, whereas Volkswagen is still selling combustion engines in the electrified field. They don't have a competitive edge against their Chinese competitors, and that is what is really missing. So they're losing market share as we speak, and there's nothing they can compensate that with. That's why management is insisting that there needs to be a serious shrinkage of capacities. Analysts do think or do say that the capital utilization rate is roughly sitting at 60% for some plants in Germany. And of course, that's far too low. As you were pointing out, Steve, next round of negotiations next week, December 16th and 17th.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.